In this video, I am going to describe the valuation of goodwill. This is the one of the important topic in the corporate accounting subjects. Goodwill is one of the assets of the business. Therefore, it is necessary to understand the meaning of the goodwill and the procedure of its valuation. Basically, goodwill refers to the reputation of the business enterprise which acquires by record of successful operations and customer satisfaction. Goodwill is also known as reputation and prestige and the positive aspects of the company. So, it is the unidentifiable attribute of a business. Because of the goodwill, the business which enables it to earn more than normal profit to encourage the entrepreneur to remain in the business. One basic element of the goodwill, the probability that an old customer will always resort to the old place if the company is having the goodwill. Right. For example, if customers are satisfied due to personal attributes of an entrepreneur, basically the old customer will resort to the go to that old place whenever as long as the entrepreneur is in existed in that business, right? So before I go further, just I would like to tell you what do you mean by tangible and intangible asset. Basically, goodwill is an intangible asset which we can't see, which we can't touch, and which we can't feel. But based on the goodwill, the company earns more profits. What do you mean by tangible asset? Tangible which we can see, feel, and which we can touch. So, some of the examples I am going to give you here. The tangible assets are building, land, plant and machinery, furniture and fixtures, vehicles, and premises. Whereas goodwill Whereas, as far as the intangible assets are concerned, goodwill is an intangible asset. Besides that, the bronze, patents, copyright, trademarks, all are included in the intangible assets. Having said that, let me go back to the what do you mean by the goodwill? As I mentioned earlier, this is the most important and valuable asset for every business organization. Right. It is related with the value of reputation or name of the business. See, that is what exactly the goodwill meant for. What are the factors affecting the goodwill? Right? The factors, internal factor within the company itself, there are some factors affecting the value of the goodwill, that is a reputation, more profits, quality of goods, customer satisfaction, how we are maintaining the relation between employee and employer, and efficient and effective management, profits for the past few years, how they are getting profits, increasing trend of the profit, that will be the internal factor, means that will be happening within the organization itself. These are the factors affecting the valuation of the goodwill. Whereas coming back to the external factors, means customer profit of you, how customers profit of you, that how they are taking our company as in their view, and relations to its competitors, popularity of product, availability of raw material, how they are maintaining good industrial relations, and what kind of government policies they are following, what is the time dimension and effective advertisement how they are giving. All these are the external factors which are affecting the valuation of the goodwill. Right. Now, before I go for means methods of the valuation of the goodwill, the basic features of the goodwill is it is an asset of the business. It is enables a business to earn more than the normal profits, and created variety of factors such as location, personal attributes of entrepreneur, and efficient management, all these things will be the internal as well as external factors of the affecting to the goodwill. Now, the most important topic in this today is methods of valuation of the goodwill, right? As the picture mentions, first average profits method, super profits method, capitalization of profit method, and annuity method of super profit. First, I will go for average profit method. Right. This is a simple average method. See how with computation of average profits, the total profit by number of years. If there is any loss, we need to deduct, or if any adjustment for those years, we need to adjust to the total profit. So average profit is total profits by number of years. Then super profit method. In the super profit method, first we need to calculate average profit, then normal profit. How we are going to calculate normal profit? Capital employed into normal rate of return. What do you mean by the normal rate of return? The return which is just sufficient to encourage entrepreneur to remain in the business. That is called normal rate of return. It is the total of pure return and risk return. What do you mean a pure return? Rate of return from risk-free investment. See, suppose if you, invest in the fixed deposit, it's a risk-free rate of return. Means if it is at 8%, that is risk-free return. You're not, taking any risk for getting that return. So that is a risk-free return and risk return. What do you mean by risk return? See how much you are taking that much risk, the expect the risk premium on compensation of for the risk which is taken, and expected risk premium is called risk return. So risk free return and risk return, the both the things will be called as a normal rate of return. So normal rate of return is pure rate plus risk rate. The risk premium it is also known as. So that is called as a normal rate of return. Alternatively, the normal rate of return may be taken as a equivalent to average return from similar business. That is a normal rate. What do you mean by the capital employed? Here, capital employed means assets after revaluation. We have to exclude the goodwill, non-trade investments, and fictitious asset which we can't the fictitious assets are losses of the company, right? Minus liabilities, you are going to get the capital employed. So capital employed into normal rate of return, you are going to get normal profit. After that super profit, you are going to get average profit minus normal profit. Then the valuation of goodwill is super profit with number of years we are expecting to the purchase. That is called the valuation of the goodwill as far as the super profit method is concerned. Then capitalization of profit method. First, we need to calculate as usual average profit, then normal profit as we calculate in the super profits method. Then you are going to get the super profit. After getting the super profit, we need to do capitalized value of super profit at normal return. That is called the goodwill will be 100 by normal rate of return into super profit. We are going to get valuation of goodwill under capitalization method. So the basically what we have to do extra here is valuation of goodwill 100 by normal rate of return into 100. That is you are going to get the capitalization of profits method. The last one is annuity method of super profit. Here what we need to do is average profit we are going to calculate, normal profit and super profit, while calculating the valuation of goodwill, that super profit into annuity value, the relevant annuity value. What do you mean by the annuity value? To determine the present value of the relevant annuity, we have to go to the table with reference to the number of years and expected rate of interest taken from annuity table. So, what is the value of rupee today? What is the value of the same rupee after 4 years? We are going to get it from the annuity table. As it makes that the use of annuity value, it is known as the annuity method of valuation of the goodwill. So, how we have to calculate the value of goodwill of the firm, determined as valuation of goodwill is equal to super profit into annuity value. So, these are the different methods. Thank you. Thank you for watching. Thank you, Varanda.